Okay. So we're back. So I can start my video now. Okay, all right, amazing, guys. So everyone can see my screen. So let's get started. So the very first thing we're going to be talking about is finding, I say this all the time, and I think it's very important, is finding the zone to trade on, finding the zone, finding the currency you want to trade on. What pair do I want to trade on? Do I want to trade on GBP? Do I want to trade GBP against USD? What pair do I want to trade on? And guys, if you've been following, you know the first thing we do is to come to our currency strength meter. Our currency strength meter is what shows you the trade, the currency you should put your eye on. For example, when I come to this setup, I want to pick two pairs, or a pair. I want to pick a pair. Understand? Or yeah, we could say two pairs. You could just look at two pairs that you want to look at, just in case one is not going the way you want to look at. You can look at the other one. So right now, I'll be looking at anything that is 1 bar against anything that is at least 4 to 5 to 6 bar. You understand? So I can look at AUD USD and I can look at GBP USD. Understand? I can look at CAD USD. I can look at which other one can I look at? I can see GBP, Euro GBP. I can see AUD. I can just pick the lowest against one of them that is really full. And I can have an idea that, okay, this market is going to go in this form. Now, if you're brand new, I'm going to try to break what you should look out for after seeing this. But I'll try and be fast because there are a whole lot of people that are on the call that really want to get to the depth of the depth of the training. So when you come up here, you want to pick two pairs. Understand? This is a pair. A pair is one currency against another. So if I pick two pairs, this is GBP, I pick GBP USD. Now the first currency, I said GBP USD. The first currency I said was GBP. GBP is the British pound against the US dollar. The pair that is first against the pair that is second. Usually, if the pair is first and it's full bar, it's supposed to take the market up. So the market is supposed to be going on an uptrend, or what we call a bullish market. If you know the animal bull, if the animal bull attacks you, it's usually going to try to hit you up. Understand? And if you know the bear, if you watch Nigel Wide and all those stuff, the animal bear, that's the bear. If it attacks you, it wants to pull you down. It doesn't have strength when you're standing. It has strength when you're on the floor. So it wants to push you to the ground, and then it has more leverage over you. While the bullish market, it wants to hit you up. That's where its strength lies. Its strength lies when it has hit you up, when you're high above the above the ground. So GBP is the first pair. USD is the second pair. If GBP has more strength than the US dollar, the market is going to go upward. And if USD has more strength than the GBP, the market is going to go downward. The GBP is the first pair, the USD is the second pair. If the first pair has more strength, than the second pair, it's going to go upward. But if the second one has more strength than the first one, it's going to go downward. I believe everybody understands that. That's like beginner. That's like one of the things that every beginner should know. Now I move on to my hourglass. Now in the hourglass is filled with a whole lot of colors. It is not as complicated as many people feel it is. It's actually as easy as it's actually very, very easy. It's actually very, very easy. So you have looked at the currency strength and we have picked up a pair. Let's say we picked up the pair of AUD USD. So we're hoping that AUD is the first pair I mentioned, USD is the second pair. That means AUD is small and USD is 1, 2, 3, 4, 5. USD is 5. So the market is going to be going downward. I've given this example a lot of time. If you should look at it as a hill. If you have the stronger guy at the top of the hill and the weaker guy at the bottom of the hill, when they try to do a tug of war or a tussle, the stronger guy, irrespective of whether if he's up, he'll push the weaker guy up. If he's down, he'll push the weaker guy who is up, he'll pull him down. So the pair that is always at the top of the hill is the first pair. The pair that is always at the top of the hill is the first pair. In this case, if we're saying AUD USD, USD is not the pair I mentioned first. I mentioned AUD first. So because I said AUD USD, the pair automatically at the top of the hill will be AUD. And since AUD is at the top of the hill, what is the strength of AUD? Just 1 bar. And why USD, who is now at the bottom of the hill, because I mentioned it second, becomes the currency with more energy. It has 5 bars. So if they do a tug of war, market will go down because USD will pull AUD, which is the first pair I mentioned and is at the top of the hill, to pull him down. If you're taking notes, whatever I'm saying is not going to sound confusing to you. But if you're trying to just listen to me and feel you can get what I'm saying, then you would probably make some mistakes. So let's go back here. So now we have seen those two pair. We're looking at AUD USD. You come to your CASHTRAP. Sorry guys, let me just put my phone on silent so I don't get people calling me. So the next thing you want to go and look for AUD on your hourglass. Now when you scroll, we'll look for AUD USD. Look for AUD USD, searching. Let's see AUD. Yes, AUD USD. Amazing. This could even be a trade that we potentially look. In fact, it's at the best place for this training. It's at the best spot for this training. Now we come to AUD USD. Now the market, based on what we have gotten from our currency strength meter, market is supposed to be going down. But when we opened the CASHTRAP, market has already been going down. As you can see, market has already been dropping. You see, it has already been dropping. But everything that goes down must go up at some point, and everything that goes up must come down at some point. No matter how high the market goes, it must come down. And no matter how low it goes, after a while, it will go up, which is why Bitcoin, people do not understand the movement of cryptocurrency. No matter how low it goes, it will manage to find its way upward. At least it will find its way up from wherever it is. It may go back down, but the thing is that it will go up at the end of the day. So there's what we call higher highs and lower highs. So what you can see right now is what we call, you can see this spot where we are now. This is the height. But let's look at this other spot. All these other red lines you're seeing, these are resistance lines. This is the height. The second height you're seeing here is lower than the first height. Now don't get confused, just listen to what I'm saying. The third height is lower than the second height. And so all of them are going lower. Each height is going lower. The height is what you call the resistance, is what you call the roof, while the base is what you call the support. Now, if you can see, look at this support here, this green line. These lines are your resistance and your support lines. The red lines are your resistance line. You can also call it your roof. You can also call it your ceiling. You can also call it the sky. You can also call it anything high. Understand? While the base is what you want to call your floor, is what you want to call the earth or the ground or anything. Just that is the floor. And believe me, anything you throw up, depending on the momentum you use to throw that thing up, it will go to a height where it needs to drop and at least touch a base. Understand? If you throw something that can bounce, when it goes up, it will hit a base. So look at the forex market as a bouncing ball too. When it goes up, it will hit a base and it will bounce. If that base is higher than the base where you threw it up from, it will bounce even higher. You understand? So this market, look at it as a bouncing ball. It came and it hit this place. It pushed higher. The momentum, it lost momentum here and it dropped down. But the base where it dropped, it did not drop at this base. If it had dropped at this base, probably it would have gone to probably the same height again. But it didn't touch this base. It dropped lower than this first base. It dropped lower than this first base. So when it will go high, you will not expect it to go high to the point where it was before. You understand? You don't expect it to go back to that height. It will go lower, which is now why we have a lower high. Understand? It will go lower. And if it drops again, if it drops and it touches the same spot, like you can see, it touched somewhere around the same. So when it went high, it's kind of similar to this height here. You get? So the lower it's going, the lower the base that is touching, which is your support. The lower the base that is touching, which is your support, the lower the highs too. Do not get confused. We're going right. We're just touching some points, and very soon we'll start going into what you can grab properly. And all these things I'm saying, if you're taking notes, by the time we're done with this class, everything will make sense to you. But if you're not taking notes, by the time we're done, you will get even more confused than you started. So just pay attention and be taking notes. If you're taking notes, believe me, that's how I learned. Believe me, if you're taking notes, at the end of this session, you will see that you know way more than you knew before. Stand way more. You will realize why some trades go your way and why some trades do not go your way. You understand? But if you're not taking notes, well, you probably are very smart. So that's based on support and resistance. Support is always this green line you're seeing here, and resistance is always this line you're seeing here. Every educator calls a trade. He identifies the points For example, I say, guys, we're taking a buy or a sell at so point. What I use to call that point is my support and my resistance. Is my support and my resistance. What I use to call that point. There are other things that will help me identify when is that particular resistance or that particular support that would be used for that trade. You understand? Like the Bollinger Bands, the support, the RSI, the stochastic, and every other thing. But to get the exact point where price is going to get to, the exact price where price is going to get to, we use the support and resistance to find out what price. At least it gives us an estimate of where the price will be. That's why you guys would, it will look like magic when maybe some of the indicators will say we're going in at 0.58 and price will dramatically get to 0.58 and move in the direction they want it to go, or price will get close to 0.58 or around 0.58 and drop or move higher. You understand? So it's basically because they have done the analysis and found out the zone. Now for you to get the exact same price is using support and resistance. And I'll also be teaching you how you can use CASHTRAP to know your support and resistance. So be prepared. This session is going to be a fire session. Everybody is going to learn how to probably try out trades by themselves. If you're very new, just stick to the indicators, follow the indicators. But if you've been here for a while and you're still finding some things a bit of a challenge, you want to learn what we're doing with CASHTRAP. You get. So having said all that, SRTs, yes. So we're still on SRTs. Now, I've told you the red lines are your resistance lines and the green lines are your support lines. Price will always move up from a previous resistance and a previous, except it creates a new one. For example, this market is a live market. It has created a new support line here. That's created a new support line. This place it touched. Before this was the support line. As you can see, price will touch it and push up and touch the other resistance. But now it has broken out of this zone. As it has broken out of this zone, it has created a new support line, and therefore it's going to create a new resistance line. It's going to create a new resistance line. So I've just told you guys that SRT is the support and resistance. Don't focus, just focus on what we're saying. Don't distract yourself with a lot of questions. When you're at the end of the meeting, then your questions can come in. But if you're beating around one particular thing, what does this mean? You probably lose a bit of focus. So just listen to what we're saying. So it has created a new support line. The support is your base, is the floor, and your resistance is the ceiling, is the roof. You can look at it that way. So I've told you guys that this is where you mark out your price, the price you want to go in. And if you backdate, if you backdate, you notice that price always goes to a resistance and a support line. Price always goes to a resistance and a support line. It touches this resistance, it will drop. It touches a support, it will push up. Now, the skill is now where, that's why when I see people trying to use TradingView as their only form of analysis, you probably make a lot of mistakes. You probably lose a lot of money. Understand? But when you have a tool like this tool is breaking it down very well. And don't forget, it's not only hourglass we have in the IM Academy. Understand? The hourglass is just one of the easiest that you can understand. But Millie Mills, if you know Millie Mills, she doesn't use the hourglass. Understand? She doesn't use the hourglass. She has Liberty, which she uses. And many of them have something they have created for them. So that's why IM Academy is very powerful. I usually tell people that you cannot exhaust the knowledge on IM Academy. You cannot exhaust the knowledge on IM Academy. All right. So price has given a new support and it's going up, and it's going up to hit a previous resistance. Now price is going to drop from here. Why is price going to drop from? This is AUD USD. Don't forget, when we checked our currency strength, AUD is weaker than USD. AUD is the first pair, so it's at the top of the hill. USD is the stronger pair, at the bottom of the hill. So market is going to go down. But because market is going to go down, doesn't mean market cannot go up. So what you will do as a wise guy is to wait for price to actually go up. When price has gotten up, for example, this trade, we can look to take this trade at the 515 zones. We can look to take a sell. We can even try it out right now. I don't know if I'll be quick enough to go into AUD USD. Just to show you guys how this thing works. I don't know if I'll be quick to log into this particular broker. I've opened this a long time, but let's see, it should be dropping already. Boom, it's already dropping. It's already dropping. It's already dropping. So this market is going to even drop properly. It's going to drop more. You understand? It's going to drop more because it has gone to touch our resistance zone. So it will drop from here. It will drop from here because now don't forget we're looking to sell. We are looking to sell because AUD is stronger than USD. Although this will take a little bit of more time because everything have not aligned. We have not gotten. We can still see our put score is 2. We can still see our put score is 2. So this kind of trade takes me to my next setup. This kind of trade takes me to my next setup, my next line of teaching. How many minutes am I supposed to set on this trade? If I set 2 minutes, this thing could spike me out. How many minutes am I supposed to set on this trade? Let's see. It has gotten to that 515 zone. It's not letting me go in. Anyway, I just try. I want to just try it. So how many minutes am I going to set on this trade? If I had placed the sell when I placed it, it could have pushed up and I would have lost the trade. You understand? So how many minutes do I have to set on each trade? Now, everybody enjoys taking a 2-minute trade, a 1-minute trade, a 3-minute trade. How do I know when to set the trade? I just really think could open. I want to use live money to show you guys this example. Okay, so it's open. This particular account is open. AUD USD, just 60. AUD USD is just 66%. Okay. Okay. Market got to 520. Market got to 520. So how many minutes am I supposed to set? Now let's go back there. I'll wait for this price to push up a little bit. I doubt, but let's see if it will push up to the 520 zones again. Now there are 2 things involved. Now the very first thing is that it's already dropping. It's already dropping. Let's see, it's already dropping. Okay, but if it can push up back, I want to show you guys something. Now, it's dropping massively. Can you guys see that? It just touched resistance zone and it started dropping. But the key thing is that it played that zone for a while. Now, when price is playing its zone for a while, 2 things are involved. It's either trying to break that resistance. And when it breaks that resistance, it will go higher. It will go to the next resistance zone. Maybe not to that resistance, but it will go higher than this point. So when price is playing there, how many minutes you set becomes smart. You do not set a 2 minutes or a 3 minutes trade. It's even safer to go on 1 minute than to go on 2 minutes or 3 minutes on this particular kind of trade. You understand? Because price is playing around this place for too long. So you want to give it a bit more time. Look at this candle has gone back blue. We have 45, 44, few seconds. If you look at the timer here, by the right here, you will see it's counting down. So you want price to end on a red candle before you can now have the mind to go in. That's 1. Then 2, you want to wait or you want to give the trade more time. So this kind of trade, you can enter 5 minutes or 6 minutes or sometimes even 10 minutes. You understand? You want to give it a bit more time. I want to see what candle, what color this trade ends on. If it ends on a blue, then there's a probability that it may attempt to break that zone. There's a probability that it may attempt to break that resistance zone. You understand? Oh, some people already cleared. Some people already cleared that trade. Some people cleared at 513. Some people even cleared at 506. Whoever you are, you took a big risk. You took a big risk by entering at that zone. This thing could have spiked you out. So it would have been safer to go in on. Now the market ended on a red candle. So it's now even safer to go in. But you're not going in now because market always forms what we call boom. Guys, can you see that drop? Let's go to our broker. Look at that drop. Okay, so let's say we went in at 515. 515 is somewhere around here. Market did not even get back to 515. So we should have cleared on a 1 minute or even a 2 minutes. We should have cleared. So not even a 2 minutes. So I even just called out a trade while we were teaching. Why did we take that trade on a sell? Now that's because we came to currency strength meter. We saw that AUD is weaker than US dollar, so it's going to push down. But we'll wait for market to go up first. When market goes up, before we have the confidence to jump back in. Somebody cleared at 518, 2 minutes. You can imagine these guys. You guys are not paying attention. Understand? Those people that cleared the trade. It's funny now, but I don't think you guys were paying attention, except you just tried it out and you're still paying attention. But if you're just eager to take the trade and not see what I'm doing, then that wasn't a very smart move. So, because if you can see, the put score is showing you 2. So it is not even telling you, it's not confident, the CASHTRAP is not confident enough for you to go in on a sell. but I was giving you the analysis that you can use to understand how to take trades on your own. You want to wait for put score to be at least 5 or 4, 5, 6, 7 before you can take the trade. You get? So market forms what we call wick, and that wick is like the thread on a candle. We call all this stuff you see here candles. You can see it gives an upper one and a lower one. Right now, market has not given the upper wick, except I can't see it. But market has not given the upper wick. So there's a probability that this market, exactly what it's doing, there's a probability that this thing could push up, not because it wants to end on a blue candle, but because it needs to fulfill that part of the trading system to give us the upper wick. It's not so compulsory, but 95% of the time it forms a wick. So if it push, it will probably push up to give us. That's why it's still here. This market is supposed to be tanking, but it hasn't given us that upper wick. Until it gives us that upper wick before it can probably drop further. It's time before it can probably drop further. So this is on that thing that you should be taking notes. You want to go in on a trade. If you're looking for a sell, you want to wait for it to be giving you the upper wick first. You understand? If you go in when it has, you see that it has not given you that upper wick, you're putting yourself, you're putting your trade and your money under jeopardy. It could attempt to go back to give, not because it wants to. That's why you see some trades, they will go up and spike you out and go back down. You get? They will go back up and spike you out. And the only reason the trade went out, they don't know that you're in the market. You're not the only one trading HFX. You're not the only one trading Forex. They just have to, but you're the only one that doesn't know that market has to create a wick, because the market doesn't know you. You understand? You're the one that knows the market. The market doesn't know you, and the market doesn't really care to know you. There are over a billion people that trade the HFX and the Forex markets. You understand? So when one person is crying, another person is celebrating. You understand? So the point is knowing when to enter a trade. So you celebrate with the people who are celebrating. You understand? So the market doesn't hate you, but the market doesn't like you. The market really doesn't care who you are. Understand? The same way you're trading is the same way Bill Gates is trading. It's the same way Mark Zuckerberg is trading. It's the same way the banks, UBA banks, all your banks, the same way they are trading. Understand? They are trading the same thing you're doing. So, but they have experts. Understand? And they have experts that they plug into IM Academy. Those experts come here, they pay the tuition for them, they come here and learn. And the capital they are using is now your money that you're dropping in the bank to do this kind of thing. So that's enough for that. So this market may give us the upper wick. It may go up to give us the upper wick. We have 1 minute more. So that is still a possibility, because the trade is still not over. It's still a possibility. So do not forget why we chose to take a put or a sell on this particular trade. Everybody knows, look at this market is still pushing up. You can see that even after that major drop, you can see if we go to our trading view, you can see it just manages to push up. Although it hasn't really gotten to our 515 price, but it has gotten to 505. You get? So it's really pushing up. Let's see if it will give us that upper wick. It has finally given us that upper wick, guys. It has given us that upper wick. You can see, if you can see my screen, you notice that that little line wasn't there before, but it has finally created that little line. Now it can now fulfill all righteousness and stay down. Understand? But if it hasn't done that, if you can look at my screen very well, you see that it just formed that little wick. If it hasn't done that, you can put it in Nigerian English that it's not going to rest. You know the way Nigerians will say, its body will be scratching him until it goes to do that wick. So you enter the trade and you're expecting the market to go down, but you're forgetting that market has to give the upper wick. When markets go right now, is forming an upper wick, and that's why you see a blue candle in as much as market is supposed to drop. So it will give that upper wick and then it's going to drop. So this is that. And I've also explained our timing. Now, when market was doing all this play, it was doing around this zone, it would have not been wise to go in on it 2 minutes. It should have been probably even wiser to go in on it 1 minute. But to go in on it 2 minutes or 3 minutes wouldn't be wise. Instead, going in on the 5 minutes would have been wiser. Because at least at the end of 5 minutes, you would have been able to play. Are you guys seeing what's going on here? That this thing just went up to give us an upper wick. So it gave you a blue candle. So that blue candle is your potential to go in on that trade. You're not going in on a trade when you're seeing a red candle if you want to take a sell. You want to see a blue candle and then you go in for a sell. I hope nobody's taking that trade. I hope everybody's paying attention. Understand? For me, I would have loved to go in at this point. If I had gone in at this 515 points, which I told you guys, you can see that. You can see it's dropping massively. 515 or 520, you would have been in profit. Maybe with some rollovers, just in case you went in on 2 or 3 minutes. But that trade would have cleared. So, but it would have been wiser to save yourself the rollovers. It would have been wiser to go in on a 5 minutes or a 1 minute if you have the mind. or a 1 minute if you have the mind. Instead, going on the 5 minutes, going on the 6 minutes. You understand? This is one of the practices that Millie Mill uses, that she calls 15 minutes trade, fixed time on. Understand? Fixed time on. So the trade will end on the 15 minutes. So when a new candle is opening, and then her own trade is ending. So we're not taking a trade on that one. So I've taught you guys perfect timing. I've taught you guys SRTs. So now I want to teach you guys the next thing is a buy and a sell strategy. I'll save that one for later. I'll save the buy and the sell strategy. Taking a buy and a sell on a particular trade. You want to take a buy and a sell. So you want to go in on a trade. AUD USD, yes, you know this trade is going to tank, but you want to still take a buy and you still want to still take a sell, and you want to clear both of them. You understand? I'll teach that strategy at the end of this session. So the next thing is the 7-point cash trap confirmation. The 7 point, or rather, let's do the cash trap point confirmation. Now you can see that cash trap is calling is telling you to a put score of 2. Now many people will have missed this trade because they would have felt, oh, it's a put score of 2, and then I shouldn't take the trade. Cash trap has something that is looking at. If you learn how to identify what cash trap is saying, you will know how to even give yourself a score. You understand? You will know how to give yourself a score. So what are the things that what are the 7 confirmations that cash trap looks at before it calls a trade to be put score 1, put score 2, 3, 4, 5, 6, 7? It stands 7. Now everybody pay attention. I'll start from the bottom, or I'll start from the top and I'll go to the bottom. So the very first thing is this red Bollinger Bands. Now market or price needs to be at this red Bollinger Bands first. So this red Bollinger Band, if the candle is in this red Bollinger Band, cash trap calls it at 1/7. So that's your first point. If it's at this, if it's looking to take a sell, now don't forget, you come to your currency strength meter, you choose the pair you want to take. You always have to refresh this. AUD USD still very valid. You go to your hourglass, and then cash trap is going to say AUD USD will take it. We'll start counting the possibility of it going on a sell. If I come to my look at AUD USD 27.67, so it should drop massively. It should drop massively. But you're not taking a trade when you're seeing a red candle. You're taking a trade after you've seen a blue candle, just like what the market is doing now. It's pushing back to our 520 zones. So we want to wait for it to get there and see if it wants to attempt to break it first before we look to take a potential sell. So cash trap sees these red lines you're seeing here as 1. The second thing cash trap calls is this your resistance line. This is your resistance line. That's 2. That's the second point cash trap sees. So that's after this one, 1 point. This second one, this red line you're seeing here, when price touches this red line is your second point. When price touches this red line is your first point. When it touches this second red line, which is your resistance, is your what? Your second point. Now you come back down here, you can see B, B, S, B, B. When you see an S here, that's what cash trap calls the third point. That's what cash trap calls the third point. So when you see a call score of 3, right now we have call score of 3. I'm giving you an analysis. We'll count how many cash trap is seeing right now. I'll be able to say this is this or this is that. So the first one is what? Your Bollinger Bands. You can write it out, your Bollinger Bands. You can write Bollinger Bands, Bollinger Bands, Bollinger Bands, depending on where how you learned your English. So Bollinger Bands, but it's spelled Bollinger Bands. You understand? It's spelled Bollinger Bands. So the first one, it goes up to the red Bollinger Bands. Cash trap sees it as 1 point. Second point, it goes to a resistance line. It goes to, now do not forget, when it gets to this resistance line, you want to give it a little while to know if, and you want to be careful to know whether it wants to break that line. Look at market is dropping again. You want to know if it will break that line. And if market breaks that line, then you want to look at the next resistance zone as your entry. Instead, you want to look at the next resistance zone at your entry. So we come down here. Once you see an S, now you're seeing a B, which means a buy. You have not seen, after this B, I've not seen any other thing. The next one is your S. Once you see your S, you know that is cash trap saying 3/7 right now, a put score of 3. Understand? The fourth one is this line here. This is your stochastic line. When price crosses this red line, when price is above this red line, This is your fourth confirmation. Don't forget, our first confirmation is Bollinger Bands. Second one is this resistance line. Third one is this stochastic when it shows you an S. Simple. The fourth one is when price crosses this red line. When price is above this red line, price has to be above this red line before you count it as 4. The fifth one is when price has moved above this other RSI, relative strength index. It tells you whether the market is overbought or whether it's oversold. Understand? When it crosses this red line, that means market is overbought. And do not forget, anything that goes up must come down. Anything that goes up. So when price is overbought, that means it has gone high to the point where it's getting tired and it needs to drop. It's getting tired and it needs to drop. And so that is your this is how many we have counted. The first one is your Bollinger Bands. The second one is your resistance line. The third one is your stochastic, is your first stochastic. The fourth one, 1, 2, 3, 4. Yeah, the fourth one is your second stochastic. It's also a stochastic too. But don't forget, price needs to be above the red line. The fifth one is this other stochastic here. There's this RSI rather, the relative strength index, telling you if market is overbought or oversold. So when it's above this place, yes, you know you have your fifth point. You have your fifth point. And you will not see that it's showing you a put score of like 5 or 6 or 7. So it's now safe. Once you can count all these things, it's now safe to go in on a put and vice versa. But do not forget, the only reason you'll be looking to take a sell, the only reason you'll be taking to take a sell is when you've looked at the currency strength and you can see that it is moving in such a way that market is going to drop. That means the pair that is beneath is stronger than the pair that is above. You understand? So market is going to drop. You understand? Market is going to drop, guys. Market is going to drop. Now we can see a put score of 3 right now. Why are we seeing a put score of 3? That's because price is above here 1. This is 2. And what is the third one that CASHTRAP is saying? CASHTRAP is saying 3. I can see 1. I can see 2. And the arrow is the third one. It has reduced to 2 right now. It has reduced to 2 right now. So it's just 1 and 2. I think this, yeah, it has gone back to 3. So this red arrow is the third one. This arrow is also a confirmation. Now the 7th confirmation, because you will hardly see a 7th confirmation. The 7th confirmation is the EMA line. Now, when you can see this, I think this is the EMA line right now. This is the EMA line. It's usually in the center. Understand? It's usually in the center. So that's the exponential moving average. So when you see this red line, when you see that is a red line, you should not be looking at buying. Let your mind just be on selling. This red line is just saying that remove your mind from anything buying. It's better you wait and take a better sell position than you go and take the risk to buy, except you're an expert. Understand? So you're only looking to take a sell. You understand? You're only looking to take a sell. You're only looking to take a sell. You understand? So that is that for amazing. We have been able to do this just under 1 hour. Now, this is everything for CASHTRAP. Everything for CASHTRAP. Understand? Now we are moving into the next one, which is M and W's. M and W's. Now, M and W is a forex pattern. And I'll be looking for a trade that we can do M and W on. Let me see if I can explain M and W with this chart. Oh, amazing. I can see M and W. I can see M and W. Now, those people that just jumped in on the call and you're asking a whole lot of questions, it will do you some good to just focus on where we are right now. If you keep asking questions, you're distracting other people who are here and you're distracting yourself. And you're attempting to distract me also, because I'm trying to avoid looking at the charts. You understand? So I don't get confused myself. So this is not time to answer the question. So just pay attention to what I'm saying. And do not forget the session is being recorded. So I'll drop it and you can go over it again and again, just in case your network isn't so good. So we are going into M and W's. We are going into M and W patterns. So write it out, M and W's. Now, M and W is a forex pattern. Basically, just the same way it looks. Market will be forming what you call an M and a W. So I want to tell you how you know when markets will form an M and a W. Now, market forms an M and a W when price are the same. When you come to currency strength meter and you see that they're the same. For example, let's look at USD JPY. USD JPY is the same, but this thing JPY just increased now. But let's look at it. USD JPY. Let's look at USD JPY. Let's go to USD JPY. USD JPY. So this part is now a little bit advanced. This part is now a little bit advanced. So I will switch to TradingView to explain certain things for us. I'll switch to TradingView very soon to explain certain things for us, because this is now for people that want to be professional traders. So if you're not looking to, although I don't see any reason why anybody shouldn't want to be a trader, because that's where the whole world is driving to, you get. But this is you wanting to be a professional trader, a pro trader. So I'll be using we'll be using CASHTRAP, and we'll be using, so it's a whole lot of work. So if you are not looking to be a pro trader, then this may just look too complicated for you. You understand? This may just look too complicated for you. But if you want to be a pro trader, you really need to learn this. This is going to help your trading game. So I want to see, what pair did I call? USD JPY. So let's go to USD JPY. I want to explain M and W's. USD JPY. I can't see USD JPY on my Cash App. So that brings me to TradingView. Okay, I can see USD JPY. Okay, amazing, 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 beautiful. So, you know the way the letter M is written and the way the letter W is written. Now, price forms M and W when price or when the currency strength are the same. When the currency strength is the same, market is going to be forming what we call M and W. For example, look at this trade. This is a W pattern. Let me see if I can. This okay, target. Okay, let's see this. Let's use what color can we use? What color? All right. So look at this. Okay. So this is a W pattern. This going up. You can see it looks like a W, right? This is a W pattern. This is a W pattern. Now, what do you look to do on a W pattern? Now, this is also, I think this is an M pattern. You can see this is an M pattern. Now, the reason why these are different, you can see it comes down, it just looks like a W. It just looks like a W. So it goes up, but it doesn't go up to the point where the W is now looking like this. Does this look like a W? It doesn't really look like the W I learned in English. So a W is more of like this, like this, like this, and like this, right? Don't mind my crooked stuff, but a W looks more of like this. So it looks very ugly. W looks more of like this. Yes, this is better. Like this, like this. Yes, something like this. And the M too. The M doesn't really look like this. This is so ugly. Just pardon me, guys. The M doesn't really look like this. The M looks more of like this, like this, like this, and like this. The M looks more of like this, and the W looks more of like this than like this or like this, right? So this is what this market is doing. So when price is dropping, price is going to go up a bit, but it's not go. If you guys joined my Friday session last week, you notice we did a W formation on I can't remember the trade, but we did a W formation and we entered that trade and we cleared that trade. Now, don't forget, if you're getting confused at this point, it is really not my fault. It's you that is deciding to be a pro trader. You get. So I want you to get full value. You understand? Full value. And trust me, my sessions are usually always full value. Thanks to the leaders, thanks to the coaches, thanks to IM Academy for really training me on this. So it comes from down here. Price was dropping. You're waiting patiently. You're waiting patiently. It drops. When price drops, when it gets to a new support, and you want to take a buy, once you take that buy, you're not expecting that the buy is going to go up. And if you want to take a sell, you're not waiting for price to go up to this point. You're looking to take it at half the point. Understand? Don't forget, this is when a trade has the same currency strength, understand, or very similar currency strength. very similar currency strengths. And I also share one extra secret for you. When it has very similar currency strength, it will not go that high. It will just go a little bit, it will come back down, maybe to the same area or a little bit higher than the same area or lower, just almost very similar. You can literally draw a W on it, and then it will push high again. When it pushes high up to somewhere around this point, you know that it's going to drop. You know that price is going to drop in. So you can follow, as a scalper in the Forex market, you can follow this and you can make some money. You can take a sell from here. When it drops, you can wait for it to go up a bit, and then you take a buy. You take a sell. When it comes down, you know that this thing is going to give you a W formation. So you're waiting for it to line up somewhere around here, and then you take a buy one time. You will not be scared. It's a ball stone trade because they are the same currency strengths. Understand? You take that trade, and then when it goes as high as you think it should go, then you could choose to leave the market, or you could choose to sell again. So that's taking multiple buy and sell position on a particular pair. For example, this thing, let's look at the live market, what it's doing now. It has given us this M. It has given us this M. So it's going to give us a W right now. Can I erase this junk I have on the screen? Escape. Erasing. No. Okay. Sorry guys, I want to delete all this. So I draw a new W pattern, and we'll watch if it will play out. We'll watch if it will play out right now. Okay. Drop some beautifully if you're getting some value. Drop some beautifully if you're getting some value. Drop some beautiful.